operators and the telcos are actually upgrading the network with respect to the various technologies from GSM to 3G to 4G and LTE also.
India started getting ready for this digital transformation long time back without knowing that India will go through this phase when our entire mobile journey started many years back.
Our own offices, our own infrastructure, how well we are able to leverage, and that's where the connectivity and the cloud, etc., comes into the picture.
Well, as a nation, we have embarked on the journey of Digital India, but as a nation, we are thoroughly unprepared as far as the legal, policy and regulatory frameworks is concerned.
The private sector, whether it is user enterprises like the banking and the financial services organizations or the telecom and the ICT industry, have played a big role in making this entire vision of Digital India really real for the common man.
The major threat that I see right now is connected devices, Internet of Things.
I think we are on the verge of it. I think the pace of growth should start self-correcting the whole system, and hopefully, urban, rural, all of that would merge together very soon.
Targeting the next 100 million is what we're going to talk about. And some very interesting numbers going around in the last few months. People love to say India has 650 million smartphone users. So perhaps, the number of internet users is that much. But the reality is the number of, daily active users on the internet, I think, is barely 100 to 150 million. And most people in India cannot afford bandwidth even at the rates that Jio is offering. So in such a scenario, how are we going to go about targeting the next 100 million, and what really happens, once those freebies go away, considering cash is coming back, will people still be okay to transition to a digital economy? I'm going to get Madhur Deora's thoughts first.
So the statistics that you mentioned, out of the 150 million daily actives, at least the last stat that I have from some of the banks, only about 45 million use their cards to do anything other than ATM withdrawals. So we're really only talking about 3 or 4% out of about 700 million plus who have these cards. So when you're looking at the next 100 million from that point, then internet access is actually not as much of an issue. The issue is, I suppose, twofold. One is, are there enough merchants who accept your payments, right? So have you surrounded the user with a merchant network which is relevant for them? And the second point is, does the merchant see value in accepting digital payments? And that's really the big debate about the spike that we saw post-demonetization, and then in some of the payment platforms, some of the decrease that we are starting to see as cash is coming back. In that scenario, at least our belief is that if a retailer is making 7 to 14% margin, then for them to pay 1 or 2% is prohibitive, right? For people like us, 1 or 2% doesn't matter. If somebody added 2% to your bill and they tried to explain it to you, you would say, hey, you're wasting my time. Just tell me where to sign. But for vast majority of these merchants, that is a make or break discussion. So can we be in a world where payment MDRs are zero? We believe that we are definitely trending towards that. And in a digital world, as you fast forward 5 or 10 years, there's a way that MDRs will actually be negative. And that can be very powerful for the merchants. That can be very powerful for creating the payment network, which is the topic of this panel.
Samir, your thoughts on this? In terms of reaching the next 100 million, where is that growth going to come from? Can people, do they have enough bandwidth to, conduct digital transactions? Do they have money in the first place for digital transactions? Where is all this going to come from?
There's enough and more consumers today who actually do have smartphones. I think data is also going to get solved finally. I think Jio is showing the way, and finally all the other telcos are reacting. So India does manage to actually leapfrog most of the markets in terms of mass adoption if something works for the consumer. So I'm pretty hopeful. I think 3 years out, we'll be looking back and saying, hey, data is a solved problem. Or at least the kind of data network robustness you need for payments to happen. It's not video quality broadband, but enough connectivity. I don't think connectivity is your challenge. I think incentive alignment is a challenge. Merchants clearly don't see benefit today in paying MDR unless the payment method makes the transaction conversion better, faster. So in a mall, if you can set up a self-serve kiosk and therefore conversion is better, where demand exceeds supply, it makes sense. To me, the whole Digital India initiative that we are talking about today, the biggest beneficiary, in fact, initially would be the government in terms of being able to verify the kind of money flows that are happening through merchants, getting more people into the tax net, and then hopefully being able to actually provide services back to the sort of broader population. So during that sort of 5 to 7 to 10 year journey, as India transforms itself, question is going to be who's going to fund that next 100 million. I think it's a question of who's going to absorb the cost of taking the MDR down to zero or perhaps negative. So I think here we have to figure out if the government wants MDRs to come down, but the private and open market is going to actually enable the next 100 million people, and solutions are going to come from startups and enterprises, we have to figure out who actually creates that corpus for that innovation and distribution. This is basically a very large-scale distribution and a long-term distribution problem.
Right. So much talk of MDR, so I have to get Monica Jasuja in. You know, in this new normal where people are talking about digital wallets, people are talking about UPI, what role will a MasterCard play going forward? Because card penetration in India has been traditionally low now for many years, if you look at it. So, does it sort of increase the risk for a player like you, or how are you going to look at this as an opportunity going forward?
I don't think anybody would be interested in a zero MDR, at least not us. But having said that, I think the biggest and the most important piece as a payments provider is providing simple, fast, secure transactions. I think everybody really forgets that everything should ride on a layer of security. If you assume that you are going to get a payment, you also assume at this point that there is trust associated with both the sender and the receiver, associated with making a payment which is as safe, and I quote that, safe as cash. Now, without security, security costs a lot of money. Now, we've been in the business about 50 years, 40 years in India, and I can say with a lot of pride, we've never been hacked. So we've spent about $1 billion USD in making sure that we have a robust infrastructure which cannot be hacked. Now, these services cost money. Now, as far as payment infrastructure is concerned, I don't think this is a real risk that people will stop using cards. I actually look at this as a great opportunity for people to understand the value that cards brings to the ecosystem. So I think there's a lot of talk about what cards can versus cannot do. But from the MasterCard point of view and from payment networks, I can very say that the government has been working with us. And we have an acceptance development fund that everybody is working towards to increase the number of point-of-sale terminals, for example. When people see value in being able to use their card anywhere, they're going to habitually start using their cards, which currently they don't. So we have an abysmally low number of POSs today at about 1.4 million. It definitely needs to increase in order for it to become a habit. Same with ATMs, for example. There is value in being able to withdraw from an ATM, but there's a lot more you can do. So I think it's the lot more that we need to focus on as an industry.
Right. So, Mr. Srikanth, I want to bring you in here. A lot of discussion about, bringing down MDR, about how maybe consumers need to be incentivized to conduct digital transactions. But tell me something, considering, India's GDP per capita, where we are, will it really support digital transactions, digital economy? What is your own reading of the situation?
Sure. Though digital transactions and financial payments are happening today, the ease and the comfort at which you can use with cash still roots the roost. If you go down to the village, where will your next 100 million come from? They have to come from rural India. It is not the people who are going to your malls and transacting over there. It has to be rural India. And today, if you look at that, are they ready for it? That's the first thing. We have connectivity. So probably there are 3 C's that would come into picture. One is the connectivity. Where are we as far as internet connectivity is concerned? Today, if you look at the payment transactions that are happening today, even in the cities, what is the percentage that they go through? We were running DigiDhan Melas, etc., where we were trying to do and show people how to transact. Volunteers were trying to do it. A lot of those transactions were failing. So how do you make infrastructure robust? That's the very first thing. Second is moving to the content part of it. Are you giving them the option to this person who is illiterate or probably knows only their own language? Is the content conceptualized for their local languages? And third thing is, of course, are the people digitally literate enough to make this happen? And that's where probably, NASSCOM Foundation working very closely with the Government of India with the National Digital Literacy Mission scheme over the last 2 years have been doing it. And now the 6 crore project, which is going to be coming under the Pradhan Mantri Gramin Digital Saksharta Abhiyan, should be able to address that problem. Right. However, the first two yet need to be addressed.
Right. Sahil, I want you to come in on this. In terms of, defining the next 100 million, each of them, have a different target audience in mind. You're someone who's volunteered with iSpirit and, in terms of evangelizing this whole India stack, the public infrastructure of digital goods that people can use, like your eKYC and eSign. Where do you think the next 100 million are going to come from?
Actually, it's quite heartening because I, both as a volunteer at iSpirit and even as my day job as a venture capitalist, have spent a lot of time studying India too. We invest very heavily in agriculture, we have a company in the local languages space, which converts English to local languages. And between the three of you, you've actually arrived at the answer that the next 100 million, 200, 300, you put X 100 million, is not just rural. It is urban, the urban poor, so to speak. That set for sure. It is also non-English speaking. One of the things that I think that wasn't discussed is the gap in gender. Because if you look at the gender gap in technology ownership and mobile phone ownership, we are worse than Saudi Arabia. There is a gender gap of, I think, 43% in terms of penetration. Only 18% of India's women actually have a cell phone, whereas I think more than 50% of India's men have a cell phone. That's horrible. So you can give all the cards you want, you can give all the phones you want, but if you don't give women the ability to pay, then no family will go anywhere.
Monica, do you agree that the ratio of women owning a cell phone is much lower than men?
So I think it's a phenomenon called digital parda. So
digital parda?
Yes.
Okay, that's a buzzword I'm hearing for the first time.
I've been reading a lot about it. I think it pretty much comes with tradition because Indian women tend to put themselves last. So family obviously takes the front seat as far as ownership of devices is concerned, also really using data. But the more important thing is about e-commerce numbers. People assume women shop, but it's actually not so true. It's actually the men who have the higher numbers. It's not just about access to phones, which is important for women. It's about access to money. If you enable a woman as in a family, you enable the entire family to learn. It's about if you teach a woman, you teach a family. It's the same thing about empowering a woman with earning potential.
The next part I really want to touch upon, I mean, we've discussed, the challenges in reaching the next 100 million and how to do it in a way where one gender doesn't get left out. But what role is this going to go beyond digital payments to perhaps, ease of getting loans? I know iSpirit did a pilot, where using India Stack, can you get a loan in 5 minutes? Is that going to be another, a use case as far as this whole digital India push, remonetize India push is concerned? And, if people start getting more loans online, more loans digitally, will that be an incentive for more people to adopt digital payments going forward?
Absolutely. I think, forget iSpirit. I think you ask any economist or anyone who runs any business will tell you credit is the lubricant of the economy. It's what makes the wheels of the economy turn. And it's no secret, everyone knows that we are a massively underserved economy when it comes to credit. So there's an interesting statistic. If you look at the number of people who have a household income of 10 lakhs and above, the number of people who use more than 500 MB of data on their cell phones a month, and the number of people who speak English with any degree of fluency, you end up with the exact same number, and that's 70 million. And that, of course, counts certain kids as well, which is why you end up with a plateau of about 40-45 million in terms of buyers. If you take any company that has done extremely well, from a Paytm to a Flipkart to all these guys who managed to really push hard, you hit that user curve that goes up, and then it starts hitting a ceiling. That's the ceiling. That's the ceiling you're hitting, and it's a combination of several things. In credit, I mean, user experience is obviously a massive barrier. So literacy, fluency, language, access to device, gender gaps, all of these things. And then, of course, credit. Credit is one of those things where, and it's not a question of I don't have the means to pay for it. It's a question I don't have the means to pay for it right now. Because if you look at the number of businesses that are registered, it's only 6 million. But if you look at the number of businesses that actually exist, it's like 70 million. What happened to the remaining 63? They're informal businesses. They're your mom and pop grocery stores, or they're your people who are vegetable pushcart vendors, or your electricians, or your plumbers, the driver. All these people are essentially businesses, and they have working capital problems. They have to pay for their goods first before they're able to sell. Then they have to stock that inventory, and it just sits there as dead stock for a while. So they have working capital issues.
Right. Samir, what role can UPI apps or wallets play in this going forward in terms of, expanding the scope of the Remonetize India beyond digital payments?
See, I think UPI for me, there's two things that are really, really exciting. One is the fact that the prerequisite to being digitally payment savvy or enabled actually is the fact that you have a bank account. And there I think Jan Dhan Man and some of the other schemes have just made sure that every Indian now has an account. You layer Aadhaar as an eKYC method on top of it. I think in the next 12 to 24 months, hopefully everyone will have the bank account, the mobile number, and Aadhaar sort of linked. I think government's pushing it in so many different ways. Now, when that happens, your phone number becomes a payment identity. I think it is the most natural identity I can think of in India. That is very broad-based, easily understood. That'll work. Second thing is, because of the people who actually designed or architected it, especially the iSpirit team, it's actually a very, very powerful rules engine. It's not just a payment network designed for India. It's a very futuristic, very well extensible payment trails. Simple example. How many people here today actually do standing instructions or recurring instructions using net banking? How many of you have actually set up any payment instructions? Right? It's about 1/10 of the number of people who said that they're using digital wallets. It's a pain. It's just a pain. How many of us actually have monthly bills to pay? Pretty much everybody. Being able to do those things on a broad-based sort of way, in a broad-based way, without having to use archaic net banking applications, being able to roll those out to consumers and saying, hey, you have a bank account and a mobile number, you get access to the same class of services in digital payments as the guy living in Nariman Point or living in South Delhi. That's a massive value proposition.
But, in a market like India where the rate of uninstallations is actually very high, how do you make people keep coming back for digital transactions?
Actually, a couple of things. People need to, we're a very discount-driven kind of people, but we need to see value in things to be able to use them habitually. And habit forming happens when you see value over a long period of time. So it's about being able to, but I think the key, which I think most people have touched upon, but I'd still like to emphasize it and probably underline it a little bit is, we're not a very literate nation. Digital financial literacy is different from digital literacy. Being able to use your smartphone does not mean that you can understand how to use payments. It also does not mean that you are enabled to be able to understand financial systems, and more importantly, how to keep yourself safe in an environment where everything is becoming digital. A person who is probably at your home as a maid or is a helper would still be able to use some help in understanding how to access a bank account, what they can do with it. So I think the key is not just about access, but in parallel also empowering people with knowledge and information to first of all not be scared of using things which are necessarily don't look like cash or don't feel like cash, but offer value. And credit is only one of them. If you have no traceability in the system, at the end of the day, you're not going to be considered credit worthy. And you are depriving yourself and your family the chance of a better life. Now, having said that, there are two sides of the equation as well. There's one is the consumers, one is the merchant. Now, consumers see habit forming applications and more importantly technologies as something that's a lifesaver for them, something that adds value for them. But eventually right now it's all discount driven. We have a lot of VC money coming in. But what will stay with them is something that they can trust and truly value over time.
So and if the discounts go away, then what happens?
Sure. So basically if we look at it, I think there's another thing also. If we are able to enter their circle of influence, what I basically mean is For example, like when Digidhan Melas were happening, we were providing volunteers and they went to the mandis and trained people over there on how to do financial transactions online. But when this merchant was purchasing something from his own merchant, who was in turn purchasing from his own merchant, if they were not on digital transaction and payments, then obviously somewhere the chain would break. And that's exactly what is happening today. So in case we are able to enter over there and ensure that more and more people start accepting digital transactions, we facilitate them, we make them happen through financial literacy, of course, which will play a huge part. So a lot of work has to happen on the ground to ensure that the merchants need to also get onto this platform. How do we incentivize them? The consumers could be through various discounting schemes and so on and so forth, which everyone is doing, be the Flipkarts of the world, etc. But how do you actually ensure that these people who are transacting on these platforms, the merchants, they are able to see benefit out of it is probably what will drive the next growth over there.
Do you agree that people confuse user with consumers in India? That, we might have 100 million internet, daily internet users, but in terms of the affordability and all, it's a fraction of that.
I don't think we should worry too much about whether companies' business models are rational. I think what's very encouraging is just the number of very cool startups I get to meet every week, started by very young people with no fear of failure. That is very enriching. These are people who are going in and saying, fundamentally, I want to solve problems. There are people who, in India, who don't have access to something. Through technology, they should have access to this thing. That's my dream. I think that is very encouraging, and that is going to be the collective power of these thousands of startups who are going to bring relevant products which will give access to these 100 million. Because remember, we confuse access with users everywhere, right? So we have 750 million bank accounts, only 40 million cards used, right? So the access versus user problem is everywhere, right? The person, they have access to some payment instrument. They have a debit card, actually 1 billion bank accounts, 750 million debit cards. So they have access to debit cards, but they don't use it. So bringing relevance to their lives with the products that you're trying to build is very important. So the next 100 million will come because you have built something relevant for them. You have told them, I'll solve this credit problem for you. Or I will help you pay in a place where you want to buy. You don't have to go online to buy if you don't want to, right? You want to buy offline, you buy offline. But I will solve your payment problem there. So in many different ways, you have to solve the problems that they think they have. And that's how you, I think, get the next 100 million to become active users.
On that note, thank you all so much, and some very interesting insights on how to reach the next 100 million. Hopefully next year we would have at least reached the halfway mark. I don't know, thanks to more money coming in to all these companies. But thanks so much for that. Thank you.